Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is May 6, 2019. Tonight I'm going to take a look at copper, the ETF being CPER, as one that you could potentially trade here. Now the reason I'm looking at this particular market is we've got a mixed bag here, and there's opportunity to be had here. So short, intermediate are still pointed down as far as the trends. There's a little bit of ambiguity. I'll focus a little bit on this today with the longer term trend, but without a doubt we've got sort of a mixed bias here where they're not all pointed up or all pointed down. So we've got a mixed bag here. We also have a technical rating which looks at a lot of different types of alerts and indicators all combined together to give a technical overview. And whenever there's ambiguity and there's not really strong strength, positive or negative, we're going to get this little sideways arrow which suggests that there's ambiguity in the market. There's nothing else that's really showing up here in like overbought or oversold, but there is some clarification that we can actually look at when we look at the deep dive patterns. And with copper here, we've had recently a surge low for profit taking, which is suggesting the market's going to base and head higher because it's a low. It happened 2 trading days ago. We had a days, which is a reversal type indicator. It's not the strongest, but it's strong, meaning the performance of all of the different reversal indicators between pop and stretch and pulse and dazed. This one's strong, but it's not the strongest. Stretch is actually one of the better ones. And then we also, with today's action, had a T-rope, which is basically just how it interacts with specific moving averages and the fact that it's found a little bit of a base. Now, if we actually look at copper, these are daily bars for copper. You can see the resistance that it ran into and that it's been falling off ever since. Had a big move today, and part of that is the fact that it has been basing last 2 trading days. It's been basing on this support level. Now that's not a strong support level with only 8. We prefer to look at 50s and 40s and 30s. So this one at 8 just simply tells you that the strength, and that's what that number represents, isn't the strongest. But it did in fact come down and touch and is now rebounding a little bit from that particular level. Just recently we had an oversold condition and was telling us that the market might actually bounce up here. That triggered obviously as of today being Monday, as of late last week on Friday. So there is a little bit of a basing that's taking place here. But the key here is that the basing isn't, from a support level, not very strong. So I'm going to give you this number right here. It's 2.7703. That's what this level represents right there. What we want, if you're long the market, we are not, we're short, but what we're looking for is for the market to stay above this if you're long. And if you're short, as we are with some of our pattern-based systems, we want it to fall below that level. If we take a look at a weekly bar, outlook here. Here's the strong kind of reversal that we're seeing on weekly bars, and with where we are, there is some, even though we didn't even touch it, this level over here, again, very weak support to the market. The strong support is this 24 and this 24 over there. 2 different levels, they just happen to be 24s. And if it combine this with the 16 and the 16, again, 2 different levels, just happen to be the same numbers. And you'll see that it's a wide range, and these are weekly bars, but the highest of these is going to be this level right here, which is at 2.6682. That's what this level's right there. All of the other ones are slightly below that, but you can see there's a tremendous amount of support to the market. It just isn't at the level that we're at right now. So we could see some continuation to the downside. This little dot right here on weekly bars is a wave high, and that's what it's triggering. So if we go straight back up, you can see that it triggered, pretty close to the high. In fact, it was the high and the highest high, but maybe not the closing high. And ever since then, it's been selling off a fair amount. So this little pop that we're seeing, this little base that we saw today, just watch it. Watch that level that I gave to you on the daily bars, because this level right here is going to be critical. Obviously, this gray line right here, that's a 200-day moving average. And what we want to see is, if you're long, you want to see it above that. If you're short, like we are, you want to see it below there. And if we are able to break below that, then we've got a fair amount of downside pressure and a lot of opportunity to make some money on the short side. So I'll just come back to the website here real quick. Here is the depth gauge, and it's right now in a neutral phase, mixed. And what we want to see here is give us a decision. Are you really going to sell off, or are you going to really start to power to the upside? So the reason I'm talking about copper is that there's the change in the air. Could be to the upside or downside, and I pointed out where that support level is that you're going to be looking for. But just bear in mind that because there's a mixture in the trend, specifically in the depth gauge trend, that means that there's opportunity to be had one way or the other. So this reverts back to where the systems are. Now the systems for copper have been short since the April 22nd. They got a nice little open position profit. It's a pattern-based system, meaning not a trend-based system. And what that means is that they're shorter term oriented. Short the market is one thing. We're short and looking to make money if the market sells off, but I'm talking about shorter term time frame that the pattern-based systems typically get in and get out fairly quickly. So we'll see as whether or not we're able to generate a profit when we actually liquidate this position. Now, if this was a trend-based system, they have a tendency to stay in trades for a longer period of time. But just simply watch the systems here and see as whether or not the market is able to sell off, break that support level, and generate some more money. If not, if it starts to break to the upside, stronger than it was today, and really start to prove that a bottom is in place, as is suggested by some of those deep dive alerts, then it's going to head higher, and we'll obviously give back a little bit of money from this perspective. But the bounce we had today is either going to be a U formation bottom and it's going to head higher, or it's just a false signal, and that support level that I was referring to, I'll show it to you again. This support level that we're seeing right there is nothing more than just holding on to it for a short period of time, and that it's in the cards that we're going to break below. So I always tell people, watch the systems, because there's change in the air, there's opportunity in the air, and if we're able to break that level, as I mentioned, there's a nice downside. Otherwise, hopefully it meanders for a little bit and allows our system to liquidate and take whatever profits it's able to take on the short side right now. So watch copper. I think that there's some good opportunity here in the near term, and something that you should be focused on. So we'll take a look at some more markets tomorrow and go from there. Thanks very much. Bye-bye.